Awesome. So to kind of follow up AMC, we now have one of my favorite movie stocks, AMC. There's only like two to pick from. I'll cover the other one in the next module. But AMC has been really, really interesting, and it's taught me this really important principle about staying up with your swing trades. Even if it only means an hour a month, or maybe even an hour every 6 months. Like, you need to put like a small amount of time into your investments to make sure that they do well. And that's a principle and a concept that I learned really well with AMC. So basically how this trade went down is we got in at 16, which was like right here. And I remember this wasn't a stock that I actually planned. So kind of like, since you guys are a little deeper into the course, I'm gonna let you in on this underground secret. Basically, like when I start a new portfolio, what I do is I write down a list of like all the stocks that could be in this portfolio based on like risk tolerance, based on the sector, based on mostly like who it's actually for. Like if it's for me, like I know the stuff I would invest in, but if it was somebody else, like I need to know what they would invest in, what they'd be comfortable investing in. So I have like a big list that I kind of put everything on, and then I like cross out 95% of the list, and I invest in the 5% that are left after I do a bunch of research for like an hour or two or something like that, depending on how many stocks there are. And you go through a list of 200 stocks, and you have a portfolio that you can use for the next 4 or 5 years, and it works. Like, I mean, you spend like 1 weekend doing it, and it's, it outperforms like every major index on the planet. And it works really well, like it's just cool. So that's kind of my plan, that's my strategy, that's what I do. And I remember at the time, I think I was like 16 or maybe I was 15 when I did this portfolio. And I remember I had this list, and I walked up, and basically what I would do at the time, because I didn't know you could have an account as a minor with UGMA account or UTMA account. I just didn't understand those. I didn't have 9 to noon, like I wish I did. It would have maybe 6 or 7 figures. Basically though, I have this big list of stocks, and I got like 20 for the portfolio. Like this is the list. This is like the final list, and it's got like 20 stocks in it, and that's, we'll give or take 20. It's like 15, 17 or something. And like this was my portfolio. And I'm like, buy these stocks, you're gonna crush it, it's gonna be dope, and it's gonna be cool. And so what I did is I came and basically like I went to the kitchen table, and what I had to do is like my mom, she was a client at Fidelity, and so like I didn't have an account, and my dad lived like, I don't know, 4 or 5 hours away, and so you can take a plane there, and it's only like an hour and a half with the driving and stuff. But anyway, like I didn't really, like I was on like 2 times a month, maybe 4 times a month. So I sit down at the kitchen table with my mom, and I'm like, hey, let's buy these stocks in your Fidelity account so that I can pay 40% tax rate when I sell them. Which, I mean, you gotta make a trade-off, right? Super high adult taxes, or don't start investing. And really when you're young, like, the answer is to invest. It's worth every penny. You can pay literally 4 times as much in taxes, lose money on everything, and you will come out ahead in the long term with all of the knowledge that you gain. And what's cool is you not only gain knowledge, but you also gain money, which is cool. So I sit down at the table with my mom, and I give her, I'm like, here's the list of stocks. Whenever you can you go in and buy? Make sure that you buy on the bid. I cannot tell you how many times I asked my mom, you need to buy on the bid. Put in the bid, and it will increase your returns instantaneously. And she's like, okay. And so anyway, the point is, it was kind of a process every time I wanted to buy stocks or sell stocks, and it became really, really tough as I started getting, more and more into like senior year, and like right up until before I was 18, like I honestly didn't trade a stock for like 3 months before I turned 18, just because my mom would like trade me things, which kind of sucked. And it's a concept I dive a lot deeper into the How to Win Friends and Impulse People seminar series. And what's cool is I know part of that should be public, so you can have, and then obviously you get the whole thing as a client. So anyway, I dive really deep into that. But there's one concept I talked about in that seminar series, and that one concept is really, really powerful. It's this idea of getting an outside perspective. An outside perspective is so key. And again, I bring it down so much more. But at a very core level, and how it applies here is actually pretty basic, okay? I want you to think about it like this. I have this list of stocks, and nowhere on this list of stocks is AMC, or the next company you're about to see, which we'll get to in a moment, is Regal. Okay? Neither of these on my list, but somehow these 2 stocks ended up in my portfolio, and they ended up teaching me a lot, and they also ended up making me a lot of money. How did this happen? I sat down at this table, and my mom's like a couple feet next to me, and I'm like, here are all the stocks we need to buy tomorrow when the market opens, please and thank you. And she says, okay, sounds cool. She's kind of looking through some of the stocks, and Yahoo Finance, if you look sort of on the right tab, you can expand that right tab, and it'll kind of suggest a bunch of stocks for you. And if you're a little bit newer and you don't actually have any watch lists or any portfolios, instead of like having your watch list here, your portfolios there, it'll actually have like just randomly suggested stocks, like what are the popular stocks or stuff like that. And you can log into an incognito window if you want to just log out of your account. You can just log out of your account and you'll get a bunch of random stocks here. And one of those random stocks was AMC. And my mom was looking at it on her computer while I'm sitting there twiddling my thumbs thinking about how much money I'm going to make with this cool portfolio of mine. And she's like, what about movie stocks? And I'm like, what do you mean movie stocks? She's like, look at AMC and Regal. And I'm like, okay, dude. I pull up AMC, I pull up Regal. I'm pretty sure that was a ticker. They're not public anymore. We'll get to that in the next one. But I pulled these stocks and I'm like, hey, you know what? This stock went down a lot. And at the time, I had this kind of sideways mentality that down equals cheap and cheap equals good. When usually, like, you don't just want cheap things. Like, you want things that have value and that are a bargain. And sometimes that's cheap things, but sometimes it's not. So if you see a stock that goes from, $30 to like $15, like, you should probably do a little bit more due diligence than I did on this investment. I probably spent a sum total of like 20 minutes talking to my mom about this stock, and she's great, I love her, but she's not like as deep into technical analysis or fundamentals or investing. I don't think she's traded an individual stock in ever. I don't think, maybe, possibly, but I don't think she has. And she never really liked to talk about money, which was weird, but I don't know. What are you gonna do, right? Basically, this was kind of where we put this portfolio together, and I'm like, okay, dude, let's buy it. It'll be cool. Why not? So we get in, I bought the stock at $16, and for the first like month it went up, then it went down a little bit. It went down to like $10, $12. Then it went up to like $18. So I kind of got billed pretty high, but it was also like a nice position because you had sort of these MACD lines crossing. You had these really nice bottoms on the Bollinger %B, and you had this crossover on the stochastics. I mean, everything about it just looks really good. It was just solid setup based off of technicals, and you can't really ask for much more than this on a half, intention swing trade where you aren't exactly sure what's going on. Like for me, like I didn't know the movie business at the back of my hand, but I could tell that like this was a really low MACD, and this was both very, very low. And I'm sure if I add the RSI, it will tell you the exact same story as the Bollinger %B. The Bollinger %B is usually similar to RSI, but I'll add it for you guys so you can see this as a reference. You kind of see the same thing here, right? You have the RSI, and it is super, 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 super low, just like everything else. And so for me, like that's a really good buy. It's freaking sweet stock, and so I buy it. And over the course of like, I don't know, this is a weekly chart, so maybe 5 months or so, what happened was kind of interesting. Basically, the stock went up from 16 to like $19, which is like $2. So like, I guess what's that, like 10, 15, 20%? Like it went up a pretty solid chunk over a solid period of time, but 20% a year. I mean that's pretty that's great. I mean that's really good. And then it kind of peaked out. It was peaking out on the %B, and the weekly MACD lines crossed, and that was the big thing. You'll see the same kind of thing in the monthly, but a little bit more strewn out. Basically, in the monthly, you see it kind of crossed later, and then it crossed again. And similarly, the stochastics peaked really, really high at 80, and the RSI peaked really, really high at almost 100, it looks like. And so in both of those time frames, and heck, even the daily time frame, you can see that the stock, like, it's harder to see in the daily time frame just because it's kind of jumbled. But if you stretch it out to weekly, you can see that at this point right here, when it was at about $19, $20, like, it was pretty clear that, like, this was kind of like a really high point. And the thing is, like, you don't know with a lot of these stocks, you kind of see, you've got like these moving averages here, and it's always kind of difficult because you don't know if you're gonna break one moving average and then break the next moving average and then break the next moving average and then explode, or if you're gonna bounce and then die. And you really just have to watch, and if you watch it right, then you should be solid. But you need to sort of actively engage with the investment, and you need to kind of watch it on a month by month or a week by week basis. And my challenge and what I did sort of not too geniusly here is I saw this stock going up, but I sort of ignored it because it wasn't like that big of a part of my portfolio. I mean, it's only like 20% a gainer, and for most of my stuff, like it goes up a lot more than that. And so, like, I didn't think that much of it, which was really not a good idea because, again, you've got two costs of having an investment. The first cost is like what else you could be investing in, and then the second one is the actual return of the investment, right? And so you want to maximize returns and minimize the time in your investment so that you can go and invest in really, really cool outperforming stocks that are going to crush it. And for me, like, I just left the money here and didn't really pay attention to it. And when it started to fade off, like right here is basically when I should have sold, because you had a red candle, then a green candle, and then a red candle. And this is a red, green, red setup. I mean, this is a textbook trade. You have a red candle, and I mean, it's like not even a question, right? And basically, this red, green, red setup happened on the weekly chart, and I totally missed it. And the reason I missed it is because I just wasn't paying attention. And the moment that you stop paying attention, that's when your portfolio can go straight down. That's when you can have some really pretty big losses, because like the worst thing you can do is be ignorant. The best thing you can do is to just put in a little bit of time and watch your stuff. You know, even if I sold here and got to have it like break even, that would have been great for me because the position wasn't really going anywhere. But instead, I held it, and 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 I held it. And eventually I sold it at like $11. But I mean, gosh, like it was pretty bad. You know, it's like not a good trade at all. So, I mean, I don't want to like, I don't know, it just didn't work out that well. And the reason why it didn't work out that well is because I just didn't pay attention to the stock. I kind of got tied up with AMD exploding, and I totally ignored it. So, you know, a lot of times when you're starting out, you might be tempted to make a list of stocks that is massive, like absolutely huge. Like, I'm going to invest in 500 stocks, and I'm going to be as diversified as the S&P 500. And like, if you can do that, you're a god, you're amazing, like all to you. But for most people, like, you want to be able to like at least spend like 5 minutes per week, like just looking at looking at the stock and just checking up on it real quick. Hell, it could take you literally like 1 minute per stock if you really, really try. And you could maybe have 20 stocks, it might take you like 20 minutes a week. All right? Look, if you guys have 20 minutes a week, you can outperform 99% of investors by making sure you have a base portfolio and then just checking up on it periodically. So basically, you put in a couple of hours of work at the beginning and you know, probably a good chunk of time like learning how to do it, right? So you're learning and then you're applying. And learning might take a while because there's a lot to learn, but you learn it one way or another. Hopefully I can help you decrease this time so you do it much quicker with 9 to noon and with all the other training. And then you apply it, and then like that's basically like if you're looking at an axis here, this is the amount of time you're working, time worked, right? And I'm gonna put this in quotes because trading stocks is fun, it doesn't count as work. And then this is just like time. And basically you put in a bunch of work at the beginning, then you just check on it for like 5 minutes, and then you're done. Alternatively, you can do what I prefer to do, which is to just kind of like give each stock like 5 seconds every single day and have like a little line that you, so instead of having spikes, which I don't really like humps, I don't like spikes, I like to have free weekends and stuff so I can do cool stuff like this. Instead of that, I'll spend like 5 minutes a day checking all those stocks and all those positions, and so I don't make the same mistake I made with this, where I just let it go away from me, and I ignore it when it hits a peak, and I ignore it when it starts to crash, and I don't sell it when it starts to crash, or I don't sell it when it starts to explode, and I miss out on gains. It's a lot easier to miss a loss than it is to miss a gain. Like if a stock goes up 500%, or if a stock goes up even like 40%, like I'm going to know about it because people are naturally inclined to sort of recognize their winners and ignore their losers, which is why a lot of people hold stocks for way too long. And they hold investments for way too long, which is why it's so important to have a stop loss. I was silly. I didn't have a stop loss on this trade because it was a long time ago, which was dumb. I should have had a stop loss, I probably should have gotten stopped out right here, to be honest, and I would be totally cool with that, because that's the exact same price level I would be selling at right over here. So I would rather stop out in 2 weeks than stop out in 2 months and have the same end result. But I didn't, because I was silly. Now you know how to do that so that you can get sort of the same result. But anyway, you spend a little bit of time checking it, and just make sure that everything looks solid. And I mean, if it does, you should get some pretty awesome results from it. And it will really, really, really help your swing trading and your long-term, not necessarily long-term investing, more so your swing trading portfolio. You know, if I thought that movies were going to be the best thing ever, and the movie theaters were going to take over the world, and that Netflix is going to crash, and that, you know, everyone's only going to go pay $40 for 2 people to go to the movies for the next 20 years, then like I would invest, you know, sure, dude, all in on AMC. But that's not exactly how the market perceives it, and it doesn't look like it's really what's going on either. So we'll see how it works out in the long run, but at least for now, definitely one of those positions where, you know, you've got to really like actually know what's going on, and as long as you know what's going on, then you should be solid. But that's really the key difference, is actually understanding what your position is doing, not just when you get in it, but also sort of afterwards, that you're following up with it. Because again, like we talked about just a second ago, people are kind of more interested in looking at their winners and their losers. So like for me, if a stock goes up a little bit, like I'm gonna know about that way earlier than I'm gonna recognize a stock going down unless it goes down like 33% in a day, like AMC. But most of the time, like if a stock just slowly goes down, you're pretty much going to ignore it, just by natural human tendency to ignore what we do wrong. And because of that, it can kind of drain your portfolio of cash, which is not a great thing at all. And to kind of put this into sort of an image for you, there was this cryptocurrency exchange called Mt. Gox. It was like one of the first really big cryptocurrency exchanges on the planet. And they had like hundreds of millions of dollars, hundreds of thousands of bitcoins, hundreds of millions. There's a lot of money on plate. And what they did is they had this hot wallet where basically everybody would send all their bitcoins to, and they would come in here, and basically they had this level, and they would always keep the wallet filled up kind of to this level. And so what they did is as soon as it got like above this level, they would take all the excess and they would move it over to like their cold storage, right? So they would have these wallets that are like super secure, and these would be like hidden away in a vault, and they would be the best safety measures possible. And then these were like the hot wallets where all the transactions would occur. And they spent a lot of time at the beginning planning out the system. They spent a lot of time at the beginning actually making sure that it worked and making sure everything was secure and everything was connected. Because to them, like, this is a $100 million system. They have to have this system work, and there needs to be money here. Because if there's not money here, they are going bankrupt and they will probably be sued. And so they have this system that they use where they have the hot wallet, and then if it gets to this level, then they transfer the money over to the cold wallet. Without going too much into crypto, basically, this is the slightly riskier one that people might possibly be able to have, and then this is the super safe one. Usually with cryptocurrency exchanges, about 97 to 99% of the assets are held in the super safe one, and then this one is constantly regulated and shifted around and changed and monitored, right? Monitored, it's looked at, people understand what's going on with it. And for about a year and a half, what happened is somebody hacked into the thing, and basically they drilled like a little hole in this wallet. And very, very, very slowly, they just took a little bit of money out, 1 week after another, after another, week after week after week after week, after week after week after week after week, for about a year and a half, give or take. And if I can write this, it would be insane. So for about a year and a half, somebody just was taking a little bit out of the bottom of this hot wallet, and they couldn't tell because they were only looking at this top part, right? And so this kept going on and 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 on. And whoever hacked this, or who hacked this, sold upwards of $700 million, I believe, in cryptocurrencies from this exchange. And it was an international lawsuit, a massive pandemic. The guy who ran the exchange, he went to jail for like years and was like trapped in like the actual judgment system, and he wasn't able to actually like speak with his family. He wasn't able to go home. He wasn't able to do anything. He wasn't even charged for a crime just by nature of the justice system in Japan. This guy, he was one of those people who was trying to return everybody's money. He was trying to do the right thing because he got, hacked, and he was trying to make it right for everybody. And he would literally walk out of his exchange before he got sent to jail, and he would have like 800,000 yen, because it was in China. He would have like cash, he would have bags, and these bags would have hundreds of thousands of yen in them, and he would be trying to take this over to the bank so that he could send it over back to his clients, and most of his clients were in America. And he did this every single day because the federal government put regulations on how much they could transact, how much they could spend, how much they could invest, how much they could transfer on a day-to-day basis. And they were physically stopped from giving money back to investors, which is crazy, right? But anyway, it's a really interesting and a really deep story. This guy is still kind of in person. I think he's still in the legal system right now because they can't figure out who hacked this guy. And the CEO is basically the only one who can figure out who it was because he's like a super cool genius guy. Anyway, the point of that is, this happened for a year and a half. A year and a half this happened. Now, to recognize that somebody has hacked you and is stealing your money, all you have to do is spend 5 minutes looking at all of the inputs you have, and then spend 5 minutes looking at all of the outputs that you authorized, and then see if those two numbers are the same. And if they're not, it should be the balance left over. And if it's not, you need to figure out what's going on because you have a problem. That would take 5 minutes with a computer. If at any point for a year and a half, somebody spent 5 minutes checking this one hot wallet, which was the only one they used. They had like 3, and this was like, they were all connected, and they all got hacked. If someone spent 5 minutes checking like one of the hot wallets, and looked at the inputs, and the authorized outputs, within like 3 minutes, they would have noticed that somebody's stealing hundreds of millions of dollars from the exchange. And yet no one did it. And these people ran off with thousands and thousands of Bitcoin. How come? It's very simple. They put a lot of this effort in up front in learning how to create a cryptocurrency exchange and applying that information to create a cryptocurrency exchange, but they didn't do any of this. They didn't do any of the maintenance. And let me ask you a question. And some of you might not know this. If you have a new car, you buy a brand new car, what do you think happens to it if you don't wash it? See, I didn't know the answer to this question for a very long time. And then I remember I was talking with one of my old mentors, Mr. Cox. He is like this insane computer specialist guy, super cool guy. And I think it was like 6 months into mentoring with him. I asked him like what was the one thing that he thought that nobody knew. We were doing some soldering on some computer hardware and doing a lot of like physical process chips. And I was asking like what was the one thing that no one knew about sort of the things they use in their day-to-day life, like computers, tablets, or cars, or whatever. And he told me that when you leave your dirt, you leave ruts, you leave grime on your car, like not only does it look bad, but it actually physically corrodes away the paint on your car. And if you leave the dirt on the car for more than like a week, it starts like literally eating the paint out of the car, and it will fade away the color over the span of a month or two. And it's very subtle, and it happens slowly. But if you let it happen year after year after year, if you let it happen for a year and a half, your car can like literally like get bleached almost. It's really crazy. He works on a ton of motorcycles, a ton of bikes, and a ton of old cars, and he's seen it happen many a times where nobody washes the car and the dirt like sucks the color out of the paint. It's really a bizarre kind of thing to do. I don't know the chemistry behind it. I really don't like chemistry, but he was like, yeah, no one knows that. And so like washing your car, not only is it like, it looks good, it literally is saving your car from destroying itself, or the dirt from destroying your car, because you need to put in a little bit of maintenance over and over and over again. It might take you 30 minutes to do a freaking car wash, but that 30 minutes, like that's a really important amount of maintenance that you need to do. Even if it's just a little small chunk compared to the work that you put in to actually get the car, or the work that you put in to actually make your portfolio, the work that you actually put in to establish security systems, that little tiny shovel of work will have a massive impact at the end of the day. And that's kind of the big shift that comes from AMC stock here, is that not only are you making investments, which are awesome, you're absolutely crushing it, but you really do want to be consistently checking up, even if it just takes a couple of seconds to do. Like, I'm not asking you to run a marathon a day, but a half hour of exercise, metaphorically and physically, can literally change your life, I think that's probably the biggest takeaway here. So, with that said, thank you so much. And if you get a ton of value out of this module, go out there, apply it, absolutely crush it, and I will see you in the next training. Thanks. Bye.